The benefit of the question itself is that you don't really need to suck in all the IFRS 18 format. Okay. So the chances are in the question itself, they have arranged things in IFRS 18 itself as it is here. Okay. See?
Mm-hmm. Okay,
Okay.
clear.
It's just IFRS 16, it's 18 itself. You just
Mm-hmm.
need to understand how to get this into your answer. That's all. Clear?
Okay, so this is the answer. This is the question.
Question. In the
This is the
question
question.
itself, they
Okay.
have already framed in accordance with IFRS 60, IFRS 18 itself. Clear?
Okay, clear.
This is question number 433 from Kaplan. Okay, let's see. So they have given three particular areas that we have already discussed. The following information is relevant. The fair value exercise conducted on 1st April 2008. Just a moment, Sarah, just a
It's
moment.
okay. It's okay. Yeah.
Following information is relevant. A fair value exercise was conducted on 1st April 2008, concluded that the carrying value of the net assets are equal to their fair values, with the exception of an item of machinery, which had a fair value of 8 million in excess of its carrying amount.
Carrying amount.
1st
Mm-hmm.
April 2008, the machinery had a useful life of 3 years.
Mm-hmm.
Okay. So basically, this is something that we take where if it is the SOFP we are talking about, this is something that happens that is being taken into which particular area? Tell me.
So we take the difference between the carrying value and the difference
I have
goes
already
to
given you the difference. That is
that's
independent.
the difference. Okay.
So this would be taken as a fair value gain item in working note 2, and we're going to find the depreciation along with it. That's what happens, right?
Okay. Yeah.
Clear.
Clear.
So I'm just going to start with always and always, like I have told before, when you get a question for what's this? When you get a question on SOPL, first of all, you're going to write the heading. Statement of okay, consolidated statement of profit and loss and other comprehensive. Can you see the screen? For
Yes.
the year ended. What was the year end? 2008, 31st December
Mm-hmm.
2008. Okay. And then you're just going to follow the same format here. See, I'm going to start with revenue and cost of sales. Revenue, COS. I'm just using the short versions, but
Mm-hmm.
in the exam, make sure you are writing it full. Clear?
Okay.
And then
Clear.
we have the gross profit. Okay. And then we have distribution cost and administrative expenses. which usually happens where?
What do
Operating.
you mean? Okay.
Now you have got the operating profit, right?
Mm-hmm.
This operating profit would go where? Tell me. In the cash flows, right?
Yeah.
Okay. Now you're going to take the investment income. I'm going to just leave two lines after that because we might need subheadings. Profit before finance cost and income tax, financing and income taxes. Financing and income taxes. Clear?
Clear.
Then after that, we are going to take interest expenses or finance cost, as we say, and this is profit before tax expenses. Profit before tax expenses. And then we have the tax expenses. And after that, it is profit for the year. Okay.
Mm-hmm.
And then we are going to move on to comprehensive income. Other comprehensive income, where I'm going to leave two lines each. We might need it. Clear?
Clear.
And then we have the total comprehensive income for the year. Understood?
Understood.
Okay. So
Mm-hmm.
leave it at that. And always I've told you, when it is SOPL, you're going to start with which working? Tell me.
The first working.
Hmm.
Um,
Always COS. Yeah.
okay.
First working is going to be always COS. Understood?
Understood.
So working note 1, we're going to start with working note 1, which is COS, cost of sales. Clear? And here
Clear.
we're going to take, we have two company plank and strip set. So we're going to take planks COS and plank company and strip company. So plank company, we're going to take fully. How much is it? 320 000.
Mm-hmm.
320 000, and these are in millions. So we're going to just casually say that figures are in dollar zeros. Clear?
Clear.
Okay. So this is 32000. Okay. There is three zeros, right? Okay. Now, in the case of strip company, the problem is the acquisition period. First of all, start always with the group structure. No matter if it is an SOPL question, no matter it is an SOFP question, the working note one should be there. Okay. I'm skipping
Mm-hmm.
here because it is very easy. You guys can do it on your own. Okay.
Okay.
So uh this one, the acquisition period is which one? Tell me. The acquisition period is from C.
1st of
First
April
June,
2018.
first June, no?
Ah, okay, okay. This is for art.
Okay, okay. This is for Arch, that is associate. For strip, it is from 1st April. So tell me, how many months of acquisition? April, May, June, July. August, September, October, November, and December. 9 months of acquisition,
9.
right?
Mm-hmm.
So what you're going to do is you're going to take the COS of strip company, that is 81,000. Now 81,000, sorry, into 9 by 12. Understood?
Understood.
Okay. So for the parent, as far as the parent is concerned, we're going to take it full. As far as the subsidiary is concerned, we are going to time apportion it. Understood?
Understood.
Clear? No? No doubts?
Clear. No.
Okay. Now what you're going to do, you're going to leave it at that, and let's see to the next working. Next additional information. Since acquisition, Plank has sold to Strip Company totaling 39 million. So how much is the sales? 39 million.
39. Mm-hmm.
Strip Company had 1/4 of these sales in the inventory. So 1/4 is there in the inventory. So
Mm-hmm.
for the URP, how much should we take? Only the 1/4. Clear?
Yeah, so
Saying
39
again,
times 1 over 4.
yes. Okay.
Mm-hmm.
But the IGS is full. The intercompany sales is full. Understood?
Mm-hmm.
So, Sarah, tell me, in the previous class, what did I tell you? Where should we take the IGS?
I don't recall.
Sarah, deduct from sales and deduct from where? COS as well. Understood?
Understood.
So, we are going to take 1 over the COS right there. So,
Okay.
IGS is how much? 39 million, right? So,
Yes.
39. Understood?
Mm-hmm.
Clear? Just
Clear.
just a moment.
Okay.
Is of 39,000. I've taken it here. Okay.
Okay.
There is one more student joined, Gania, right? So Gania, this particular thing is there in the FA recording. If you have watched it, you might know. Otherwise, I can't help you. Okay. So 39,000 IGS we have added to COS, as in the sense that it is going to be the net effect is basically what? Ultimately, it is going to be deducted itself, right?
Yeah, so
So
0.
IGS added to COS. Workings. Only workings I'm talking about. Clear?
Okay. Clear.
And then we have to take the URP as well, because 1/4 of those inventories are still there in the system. Right?
Mm-hmm.
Clear?
Yeah. Yes.
Okay, let's see. So URP next. URP. So what is the system of pricing? During the year, Plank Company sold Arch Company for 26 million. Company held in inventory at December 2008. All of these goods had a markup cost of 30%. So they have sold to Arch Company as well. But in case of Arch Company, it is not a subsidiary, it is an associate, right?
Yes.
So only the URP would be under consideration. Understood?
Understood.
Okay, we are not going to take the IGS. Clear?
Mm-hmm. Clear.
Okay, just a moment.
So-
Okay. So first we can take the strip companies URP, and then we can move on to Arch Company. Okay. So the
Okay.
markup is how much? Markup is 30, right? So I'll tell
Mm-hmm.
you the cost is going to be 100 in this case. The profit is going to be 30 in this case. Together, the sales is going to be how much? 130.
130.
No
Mm-hmm.
doubts?
No doubts.
But the glitch is URP could be only taken into 1/4 of the inventory, because it is what it is unsold, right?
Mm-hmm. Yeah.
into 1 by 4th. Okay.
Yeah.
Into what do we want? We
Uh,
need the profit, right?
yeah. So it's gonna
So
be
what
30
to find
divided
is
by
30
130. Mm-hmm.
divided by what is given as 39,000, which is equivalent to the sales, right?
Yes.
It's clear? So 1.
Clear.
Understood?
Understood.
So this is going to be our URP. Now, this doesn't stop here. The problem is the URP could be realized only over the acquisition period. That is 9 by 12. Understood?
Understood.
Okay.
Mm-hmm.
That is 1875. Clear, no?
Clear.
Let's say we are not realizing the URP because we are already taking everything 9 by 12. So I'm just going to skip this. Okay.
Mm-hmm.
Everything would actually be taken into 9 by 12. So I'm going to skip this particular thing. Okay. So
Yeah.
2250. Understood?
Understood.
Now, the second URP, which is that of Arch Company. Okay. How much was this goods being sold for? 26 million. So 26,000. We are going to ignore the three zeros. Into, did they say how much of the inventory is left
No.
to Arch Company at
For
that?
Arch, no.
Okay. So that means we are assuming everything is held in the inventory. So it is basically unsold, right? Now,
Mm-hmm.
we can't take the full URP because Arch Company is an associate. Understood?
Understood.
So what are we going to do? We are going to take only the percentage which was acquired in Arch Company. So have they given us the percentage acquired in Arch Company? They should be. Is there any
I
percent?
think it's on
Yeah, yeah,
top
yeah.
of the question. Yeah.
Owned 35 percentage of Arch Company. So here we are going to take that 35 percentage. Understood?
Mm-hmm.
Into the other equation is just going to be the same.
Okay.
Clear?
Clear.
Okay. 2100.
Mm-hmm.
So we have our COS here. Nothing much to add again. Yes, there is. Which, what do we have left to add? Depreciation. Clear?
Clear.
Okay. So the depreciation on the revaluation gain. So depreciation, tell me, the excess is 8 million, right? We're going to ignore three zeros and take 8,000
Mm-hmm.
divided by 3 years.
9 by 12 because of the.
Yeah. And
Okay.
into 9 by 12. The other thing we have taken the URP as in a full case scenario is that they must have taken the full item. They must have realized the full item. So we are realizing the full item. That's all. Because we are removing everything. Here,
Okay.
it is only 9 by 12. Clear?
Mm-hmm.
All the expenses 9 by 12 into 9 by 12. 2000. Okay. So now,
Okay, so basically what you did, you divided it by 3 years
hmm,
and then you multiplied by 9. Okay, okay, makes sense. Yeah, makes sense.
okay.
Yeah.
Understood, no?
Yes, understood.
Inter IGS is actually negative. That is the only thing. So this is the amount. We have
Mm-hmm.
removed the COS, which was already added with plan company and strip company together from here. Clear?
Clear.
Okay. 348100 is our COS. Clear, no?
Clear.
So let's fill in. So the revenue is equal to, carefully listen, the 705. 000 plus 218,000 into 9 by 12. Understood?
You wrote 99.
Because I removed. Clear, no? Understood?
Wait, it should be 9 by
99.
12?
9 by 12. Okay?
Yeah, okay.
Into 9 by 12. Okay? Now, mine is 39,000 DIGS. Clear?
Yeah.
Now, we have already got the COS here, right? We're going to take
Mm-hmm.
the minus of 348,100. Clear?
Clear.
After this, what we get is the gross profit. That is equal to this one plus this one. Clear?
Clear.
Now we need the distribution cost as it is. That is 58,000 plus 16,000 into 9 by 12. So that is equal to 58,000 plus, sorry, okay,
Mm-hmm.
what was that? 16,000.
16,000.
Okay, 16,000 into 9 by 12. Sorry, 16,000 into 9 by 12. Okay,
Mm-hmm.
so that is 70,000, which would be taken as a negative figure, all right? Oh God. Brackets. Okay.
Okay.
Now what we need is administrative cost. This is going to be taken in the same way as well, which is
Mm-hmm.
92
92,000.
92,000 plus
I think 28,000.
28,000. 28,000 into
9, 9 by 12.
9 by 12. Understood?
Mm-hmm.
Nothing which is too difficult for you, right?
Mm-hmm.
Clear.
Clear.
I took 29,000. Okay.
Yeah.
Understood?
Understood.
So what is the operating profit? It is the sum of all of these things, right?
Mm-hmm.
Clear?
Clear.
Okay. So the difference between the previous cash flow statement and the current cash flow statement is that you're going to take operating profit. Understood?
Understood.
I think I have discussed that in the previous class.
Yes.
Okay. Now what comes is investment income, right? And when we
Mm-hmm.
went through the IFRS 18 documents or the technical articles, we have already come across that in the investment income, we are going to include all the workings related with an associate company. Understood?
Understood.
Okay. So we already have an investment income amount here, right? So on
Mm-hmm.
to that, we are going to adjust the income that we receive from associate company as well. Understood?
Understood.
Clear, no?
Clear.
Okay. So in the working note 2, we are going to take that into a different working because it's that important and the examiner needs to see that you have worked it out. Understood?
Mm-hmm. Understood.
Income from associate. Clear?
Clear.
And this is, we are going to take whatever profit that we are going to get from the associate. So that is this one. This is the associate company
Mm-hmm.
9570. Right?
All right.
Do we get the full amount of this one?
No, we have to
Full
do the
90? No.
percentage.
You only get a 35 percentage, right?
Yeah. Mm-hmm.
Understood.
Understood. If it was a subsidiary, then we take the whole one.
Yeah, exactly. Clear?
Clear.
Okay, so if it was a subsidiary, we are going to take it everything together. Since it is not a subsidiary, we are just going to take only those things which actually is for us. Understood?
Understood.
Clear, no?
Clear.
No doubts?
No.
Okay. So into that working, we're going to mention this as working note 3, working note 2, and into that, we're going to take share of profit from arch. Okay, which is going to be
Mm-hmm.
925, 925, right?
Yeah,
92578
7-0.
into 35 percentage of arch. Clear?
Mm-hmm.
32. Okay, 32400. We are just going to round it off. Clear?
Clear.
Okay. So now we have share of profit from associate. Under investment income, I'm going to insert some ROS. This is share of profit from Arch, or we can say associate. Okay, I have not mentioned the working notes here. When you do, you can mention, okay? Make sure you
Okay.
mention. I'm just going to take that with the link 32,400. Clear?
Clear.
Okay. So next thing is we have an investment income that we should receive from which company?
From the
We should,
subsidiary.
no. We should club, right? There is already an existing income, just not from the subsidiary. Ours also should be taken, right?
Okay.
Okay, so we already have an investment income here, 46,000 and 2,000. Clear?
Mm-hmm. Yeah.
Until now, we have just taken the income from Arch only. So we have still ought to take the investment from the SOPL of plank and strip also. Understood?
Mm-hmm. Understood.
Clear, no?
Clear.
Okay. So our next step is that one. Clear?
Clear.
Okay. Okay. So here the problem is, first of all, we have this one to take care of. The thing that is directly given here, 46,000 and 9 by 12 of 2,000. Understood?
Mm-hmm.
So that is 46,000 plus 2,000 into 9 by 12. Clear?
Clear.
I'm going very slow so that you understand, you grasp the topic. Clear, no?
Clear.
Okay. Into 9 by 12. That is one block that you have to take, which is directly given to you.
Mm-hmm.
Another block is such that, see, in the fourth working, okay, they have given you a clear cut information that they have strip has actually paid out dividends, right? And
Mm-hmm.
Arch also paid out dividends of 35. Understood?
Understood.
Okay. Understood?
Yeah.
The problem is you have to include this calculation in your investment income as well. Okay.
Okay.
More
Okay.
so because you're combining a balance sheet, right?
Mm-hmm.
Okay. So this is like the same URP effect that I've just talked now.
Mm-hmm. Okay.
It doesn't make sense that your company is giving dividend to yourself, right?
Yeah.
Clear? Same logic
Clear.
behind URP. So what do
Okay.
you do with the intercompany dividend? You're going to remove them. That's all.
Okay.
Understood?
Understood.
So our next working is that of dividend income. So
But
working,
this is just between a plank and strip, right?
yes.
Yeah, it's just between them. It's not arch because it's an associate.
Did
Or
we
no?
did we not take URP?
Yeah, we did take URP.
The same,
Okay, fine. I got it. Okay. Okay,
okay?
okay. Okay.
So the same logic. If the URP is taken, it is evident that dividend is also an intercompany transaction. If it was
Okay.
paid outside or if it was received from any other company which we hold only a simple investment, then it's fine. Since it is an
Okay.
associate, since it is a subsidiary, it comes under that particular area only, intercompany transactions.
Okay, got it.
Clear?
Yes, clear.
So next is dividend from associates. Understood now?
Yes, understood.
So, oh God, what the hell? Just a minute.
You're in the wrong sheet, yeah.
Yeah. So working notes 3. Working note 3, dividend from associate and subsidiary. Okay.
Mm-hmm.
So what was the dividend? 18 million from strip and 35 million from arch,
Arch.
right?
Mm-hmm.
So for strip, we get 18,000 into how many percentage have we acquired arch and strip? 85
85%
and 35,
and
right?
35, yeah.
So into 85 percentage, and for arch it is how much is the 35 million?
35.
Okay.
Mhm.
So this is 35,000 into 35 percentage. Understood?
Understood.
Okay. So 122500.
Yes.
122250. Clear?
Okay, clear.
And together, how much is it? Oh God. I'm so used to using the other keyboard that this one is confusing now.
Mm-hmm.
2750.
550. Mm-hmm.
Okay. So here you're going to deduct which amount? This. Two seven. How much did we see?
27550.
27550. Clear?
Yes, clear.
Any other thing? Let's see. Mhm. This is done. Dividends is done. See, the investment income of Plank Company for the year ended 31st December 2008 includes dividends from Strip Company and Arch Company. That is what we reversed just now. Okay.
Mm-hmm.
It also includes 5 million interest receivable on a loan note made to strip company on 1st April 2008. So in the investment income, there is a 5 million group transaction amount, right, of interest.
Mm-hmm.
Clear? So
Clear.
Plan Company gave a loan to Strip, and from Strip, they got a 5 million
Million. Mm-hmm.
interest, right? It is an income which would have taken in investment income only. We have
Mm-hmm.
already discussed in IFRS 18 that whatever income, whatever thing that we receive or pay to our associate or a subsidiary or any other investment would be taken under investment activities, right?
Yes.
Just a moment. So we are going to deduct the 5 million as well. Just a moment.
Okay.
These were not recorded. Oh my God. What wasn't recorded? I think I'll just explain it again. I think most of the things are not recorded. Oh my God. I didn't know. Or did I stop after I taking? Okay. Next area is disposal of subsidiary. Okay.
Mm-hmm.
So disposal of subsidiary happens when you are going to dispose of a subsidiary that you have just acquired. Clear?
Clear.
Okay. I'm just going to explain. Okay. So this is the question. Okay.
Mm-hmm.
So the question is, P acquired 80% of shares in S company for 350 million on 1st January 2001, and the net asset is as like this. Okay.
Mm-hmm.
And NCI at DOA at the time of acquisition is 60 million. Disposal happened. Okay. And P has given all of the shares of S on 1st August 2001 for 520 million. Clear?
Clear.
Retained earnings at that time of the year was 280 million. Show SOPL SOFP for the year ended 2001. Okay.
Mm-hmm.
Now, first things first, when there is a subsidiary that is being disposed of, it should be calculated in the individual statement as well as in the consolidated statement. Clear? So when
Clear.
subsidiary is disposed of, okay, gain, gain or loss on disposal, okay, should be calculated, right? Like anything that you dispose of, you're going to calculate the gain or loss here as well. Clear?
Okay. Clear.
In the individual as well as the consolidated financial statements. Okay, full stop.
Mm-hmm.
In case if it is an individual statement of parent, what would you do? You're going to take it under SOPL as gain or loss on sale of subsidiary, which would be under investing activities. So, how do you calculate gain or loss? The same equation, the sale proceeds minus the cost of investment. Understood?
Understood.
Okay, now?
Mm-hmm.
Understood? Now,
Yes.
in the consolidated statement, what would you do? In SOPL, you're going to take, see, lastly, what did we do? We took the parent side plus the consolidation side, right?
Yeah.
Plus the subsidiary side, right?
Mm-hmm.
Here we are going to take the same way, but in the subsidiary side, you're going to take month by 12 only until the date of
Disposal.
date of disposal. Understood?
Yeah,
Clear?
clear.
And after that, you're going to show the consolidated gain on disposal. Understood?
Mm-hmm.
Now, this is a working note. This particular thing is a working note. Oh,
Okay.
you're going to take consolidated gain or loss, which is a working note. Okay.
Mm-hmm.
And then when you prepare the SOFP, you're just going to take the parent only. Understood?
Understood.
Okay. Now, we need consolidated gain or loss, right?
Mm-hmm.
So that is yet another subtopic here. Okay. This one has a standard working. Understood? Same
Understood.
standard, just like we studied a standard working in consolidation, we have a standard working here as well. Okay.
Okay.
And the standard working, as you know, is sale proceeds. Okay.
Mm-hmm.
In the sale proceeds, of course, same like we took the purchase consideration. To it, we're going to add NCI at DOD, that is date of disposal.
Okay.
Now, deduct net asset at date of disposal. Clear?
Mm-hmm.
Then deduct goodwill at date of disposal. Clear?
Clear.
Okay. So this is X. Clear? And
Mm-hmm.
after that, what you get is gain or loss on disposal. Understood?
Understood.
Okay.
Mm-hmm.
So here, this is going to be working note 1. This is going to be working note 1. This is going to be working note 2. And this is going to be working note 3, which is a standard
Okay.
for disposal. Clear?
Mm-hmm.
Okay. Now,
Okay.
working note 1. So under working note 1, you're going to take NCI at DOA. Clear?
Mm-hmm.
And you're going to add share in profit until the date of disposal. Clear?
Clear.
Okay, so X, this could be X or X, right? Could be both. You never
Mm-hmm.
know. Does the company guarantee profit? No. Okay,
Okay.
so this is NCI at DOA.
Okay.
Now we need working note 2, which is NA at DOD, right?
Mm-hmm.
Okay, so NA at DOA. Onto that, we're going to add profit until DOD.
Okay.
Okay,
Mm-hmm.
so X and X again. Now we need working note 3, which is goodwill at DOD, right?
Mm-hmm.
Purchase consideration again. Okay,
Okay.
and then we're going to add NCI at DOA, deduct Net asset at DOA, same workings. Clear? Then we have the goodwill at DOA. Okay.
Mm-hmm.
From that, you're going to deduct impairment until DOD. Understood?
Okay, understood.
The other was DOR. This is everything DOD. Clear?
Mm-hmm. Okay.
So after that, what we get is goodwill at DOD. Clear?
Mm-hmm.
Okay. Understood?
Okay, understood.
Okay. Now let's do the calculations here itself. I'm just going to take everything. Okay.
Okay.
Let's see. In the question, I'm going to do this at last, this particular portion. Why?
Because you have to solve for them
Yeah,
first.
the others first. Clear?
Yeah.
Okay. So we'll
Mm-hmm.
start with working note 1.
Okay.
NCI at DOA, they have already given you. How much is that? 60, right?
Mm-hmm.
So 60 here.
Okay.
Plus share in profit until DOD. Okay. Plus you're going to take share in profit until the DOD. How much is it?
Okay.
Mm, at that time, that is at the time of disposal, is how much?
280.
280, right? So
Mm-hmm.
when you take these opening retained earnings and closing retained earnings difference, you would get how much profit was added in the current year. Clear?
Clear.
So that is equal to 280 minus 180, which gives a value of 100, right?
Mm-hmm.
Into what is the NCI percentage?
Was it 60?
How much percentage? What is the 20, right? This is 80. So NCI is
Oh, okay.
20
20.
percentage. Understood?
Mm-hmm. Understood.
So together it is 80. So we got the
Okay.
value here. And now we are moving to working note 2. This won't be this easy, okay? Sometimes
Mm-hmm.
you would have to repeat the calculation you studied in consolidation. Clear?
Okay, clear.
Okay. Net asset at DOA is how much? They have already given you, that is 280, right?
Mm-hmm.
Now, profit until DOD is already here.
Okay.
Okay? That is 280 minus 180 equals 280 minus, I'm recording right. Okay, thank
Mm-hmm.
God. 280 minus 180, that is 100. So together how much? It is 380.
Mm-hmm.
Understood?
Understood.
Okay, no. Now we can fill
Mm-hmm.
this. How much is the purchase consideration that was given? 350. Okay.
Mm-hmm.
What is the NCI at DOA? Equal
80.
to 60. Here, 60,
Oh,
60.
okay, okay, okay. Sorry, yeah.
What is the NCI NA at DOA? This one, 280.
280. Mm-hmm.
So what is the goodwill? Goodwill is equal to sum of all of these three things together.
Okay.
Clear? 690.
Mm-hmm.
Understood?
Understood.
350 plus 60 plus
280.
280. This is deducted. What, girl? This one
Mm-hmm.
plus this one.
Okay.
Tell me, is this a plus or a minus thing that we have to do?
Oh, minus. Okay, I understand what you're saying. Okay.
Okay, so that is
Okay, okay.
130.
Okay.
So 130 we have. Any impairment?
Mm-hmm.
No, right? Nothing mentioned in the question. If
Mm-hmm.
it is mentioned, you have to take it.
Okay.
That's all.
Okay.
So this is goodwill at DOD itself. Understood?
Okay. Understood.
We've got everything. Now, the sales proceeds, how much did they get? 520. So, we're going to mention 520 here. This is equal to working note 1. Okay. This
Mm-hmm.
is equal to working note
380.
2.
Mm-hmm.
This is equal to working note 3.
Mm-hmm.
Yeah.
Yeah.
Now, this is equal to 520 plus
Plus 80.
plus 80
Mm-hmm.
minus 380
380.
minus
Mm-hmm.
150. Clear?
Clear.
That means the gain or loss that you have realized is how much?
90.
Gain or loss on disposal is 90. Understood?
Understood.
Okay, simple, no?
Mm-hmm.
But this won't be simple in the exam.
Oh.
This would always come with ratios.
Okay.
So the chances are you have to remove the disposal contents from the SOPL and then compare before and after consolidation effects. Understood?
Understood.
So that is how it is going to be asked. Always and always disposal comes with ratio. That is the compo that they have used until now. I don't know whether it would be changed in the future. Clear?
Okay. Okay.
Okay. So
So the question that asks me to do the ratio comparison, this is the first thing I need to do.
yeah, exactly.
Okay.
They would tell you exactly what should be removed, how the disposal was taken place, and then you have to remove it, and then you have to compare these two values together.
Okay.
Okay, that means profit
Okay.
before depreciation for disposal, that or the net asset whatever the contents before disposal would be compared with the ratios. That is, you are going to
Okay.
take the gross profit ratio before and after disposal, net profit before and after disposal, right?
Mm-hmm.
And
Okay.
also other ratios as well. And then you're going to compare them together and you're going to say a summary, a conclusion of what all have happened. Understood?
Okay.
Ratio question is
Understood.
very easy to attempt.
Okay.
Okay. So ratios
Mhm.
we'll do tomorrow. So disposal is done as well. We'll be doing
Okay.
last chapter tomorrow.
Okay.
Ratios. Okay.
Fine.
And there
Okay.
are a couple of changes in the ratios that have been before and now due to the SOPL changes. We would
Okay.
take directly from the text.
Okay.
Okay.
Fine.
Okay, guys. Thank you.
Thank you so much,
You.
Nahala.
Bye. See you.
Bye
Wassalam.
bye. Bye.
Okay, bye.